You guys, 15% day, 3% in the after hours. The only thing that makes it better, the only thing that makes that better, wired internet. Let's go. Oh, I'm so excited to have wired internet. You have absolutely no freaking idea. What is up, everybody? Welcome to Trey's Trades. We freaking talk fast and don't skip class, baby. I'd like to preface by saying that I'm not a financial advisor nor expert, so take what I say with a grain of salt. Let's get into the video. So today, my friends, my family, my fellow Gorilla Gang, we're giving you the update on ticker symbol AMC, and we have got a pretty filthy, big, fat, nasty, disgusting, you know what it is, on the chart right now. The George W. Look at this thing. That's a double bottom setup, and that is extremely bullish. But nonetheless, I'm going to talk about a couple different things. I want to go over the Ortex data. I want to go over the Stonko tracker. It shows you the call options that are in the money. I kind of want to talk about hedging, delta hedging, and just give you a really brief synopsis on what that really is so that people who might be new apes understand that sort of thing. I want to talk about the daily short sale volume percentage so you get an idea of how much shorting has actually been taking place on the exchanges. That's been reported because we know there are instances where there's malreporting taking place. Finish it off with a technical analysis on this overall setup. So without further ado, let's get into the video. So we're gonna start off here with Ortex, right? So Ortex, just to preface, this is showing you the overall trend of short interest, right? This does not show you the exact short interest. It takes about 85% of the exchange data. It has a T2 settlement system, meaning that it takes 2 days for any sort of settled shorts or established shorts to be shown up in the chart, right? T2 days means 2 days to settle any sort of transactions. With that being said, what do we have rocking right now is about 77.74% utilization, which is, a decent amount, but it leaves a lot of chunk for people who want to take shares out on loan. Now, this kind of implies that you're less likely to see new naked shorts established because it's not as hard of a stock to borrow as it previously was. It also leaves a lot of room for shorts to add to their position if they are ballsy enough or have big enough ovaries to want to short the stock here at the top by the off chance that thing is going to go down. I think that's a death wish. I think they're digging their grave, essentially just freaking putting themselves in the coffin, but I digress. The short interest change on the day, down about negative 0.04%, so I'm just going to call that net neutral. There's nothing significant about that to even note. Cost to borrow max about 5%. That number is going to go up as the utilization goes up, and this becomes a harder to borrow stock once again, right? As I mentioned, this is the overall trend. It does not show you the entire exchange data. Last week, you actually saw that current short interest was down to about 11% or so. Now it's sitting at about 12.55, so it's adjusted, right? They show you a generalized picture. It's not exact information, and it's only 85% of that exchange data. Shares alone about 83 million, that is about 16.32% percentage of free float, right? And now you've got 12.56% estimated short interest, 12.55 if you take that number. Now what's interesting is these two numbers, the free float on loan, which is essentially are all the shares that are out on loan, not necessarily being shorted, but out on loan from lenders, right? And the actual short interest is starting to close down a gap, right? There used to be a much larger gap in terms of how many shares were on loan and how many shares were actually shorted, and that's starting to close down. So what I would think about that essentially is you have shares on loan that were actually short positions and weren't being reported as short positions, right? So that's a pretty interesting piece of things to see. Overall, nothing really significant happened here. This would have been Thursday's short interest data, right? Essentially all the shorts that were added and closed on Thursday. And as you can see, not a whole lot happened, right? So the short interest went down negative 0.04%, so pretty much insignificant, right? Not a huge piece to really be stressing about. Stonko tracker shows you all the call options that are expiring in the money on June 18th, and it is stupid. 480,000 call options expiring in the money on June 18th, about 950,000 total shares available to borrow. And if you look at the overall trend today, it actually went up just a hair. This doesn't necessarily mean that shorts have covered positions. It could, but it could also simply mean that there are lenders who are lending out more stock than there were previously, right? So that's a piece of the equation to keep in mind. If we cross over 60 bucks, that would be 48,198 total call options that would be in the money. And we're pretty dangerously close to that $60 mark. Like I said, in the after hours are up about 2.5-3% right now at $58.47. And if we cross over 60 bucks and start getting past that delta point, right, where there's actually risk for the market makers to write up these call options, they're going to want to hedge for these specific strikes, right? And 48,000 call options, since that's the equivalent of 100 shares apiece, would be about 4.8 million shares of hedging. That's a pretty significant amount, right? That could do some nice green damage on the overall chart setup, right? Daily short sale volume percentage again, just stagnant, not a whole lot happening here. They're not really adding to their positions, nothing crazy. There is still shorting taking place. 38% would have been on June 11th. That would have been last Friday, right? So some shorting, but it's not the astronomical numbers that we saw back here, right? There's more risk. There's more risk on the table, this sort of volatility. And I think shorts recognize that, right? Lenders recognize that. They don't want as much to do with the stock. They're just kind of letting it sit as it is so that they can, play this out and hopefully we give up. That's essentially the message that it's getting put across here. Is it's a pride and an ego play, right? They're just waiting to see what ends up happening. Now, if you look at the average days on loan for these, I've showed this a couple of times, but it's pretty high. 51.72 days is the average amount of time that any sort of loan has been held on AMC stock, which has actually gone down a pretty decent amount. It was at 54, now it's at 51, implying that some of the older short positions are starting to get covered. However, not all of them. 51 days is still an astronomical period of time. That's a very, very, very large amount of time to be holding a short position, honestly, in the red, right? So that's kind of what you got rocking up right here. Now, I want to talk about call options just briefly, right? Because there's been some talk about what actually happens with delta hedging or gamma squeezing, right? So for a call option to have any sort of gamma squeeze effect, it has to be out the money and run in the money. Now, what does that mean, right? For a call option to be out the money means that the strike price of a call option, for instance, $57, $60, $62, $65, and it closed at 57, right? You get the point. If the strike price is above the actual market value, that's out the money. So if you were to purchase a call option out the money and then it runs in the money because there's underlying stock buying that pushes the price up, right? It can cause a gamma squeeze because market makers that write up these contracts have to purchase the underlying stock by the off chance that people who buy these options want to exercise them, right? Now they have to buy that from the market, from you, from the freaking tendy town, baby. It's your stock. And that drives the price up, right? So you don't get gamma squeeze on call options that are in the money. If you're to buy a call option in the money, you can make money on it, absolutely, but you're not going to cause any sort of gamma squeeze. And the majority of these that are in the money right now have likely to some extent been hedged for. Maybe these 55, 56s have not been, but it's very possible that they are, right? So that's just an important piece of the equation to talk about. Where the true gamma squeeze takes effect is when you look at these out the money call options running in the money. So that's just kind of a quick synopsis of what causes gamma squeezes. Now, to finish off this video, I want to talk about the technical analysis because there's a beautiful setup and opportunity right here that I want to talk about. It's a combination of two things, two bullish confirmations, right? So check this out. You've got this big, fat, nasty George W setup right here, a double bottom, which is typically an indication of an upcoming bullish reversal, right? Followed by another double bottom right here, a mini George W right here. If you combine these two, you get a huge, massive, whopping 1 hour candle George W. Double bottom setup, right? That's bullish. You can think of this neckline essentially as the big resistance level. And if you're going to break over that big resistance level, it's going to come with a hard push, essentially a gap up, a hard break. In fact, I think it would be a break so hard that the next level of true resistance would be at nearly $70. Because if you look at the amount of price action in the zone, it's not a lot. It's very slim pickings, right? So that's kind of what you've got cooking up right here. The second confirmation that we've got is my favorite confirmation. It's the favorite trend that I've seen on AMC stock. It is the 4 test trend rule. So anytime that you see AMC stock test a level of resistance 4 times, the 4th test is typically the clean break over that level of resistance, right? Now check this out. Enters a downtrend, breaks out of the downtrend, starts consolidating. 1, 2, 3 different touch points of this $60 level of resistance, and I think you're going to get that clean break over that $60 mark sometime in the after hours or the pre-market or regular market hours tomorrow. And a clean break is going to look something like a 1 hour candle that opens and closes above that overall horizontal level of resistance. And the next level of resistance to me, I mean it when I say this. I tell you guys how it is. I'll say when I think it's going to go down. I'll say when I think it's going to go up. I think the next level of resistance is $70. I think it's going to be pretty effortless to get back up to that $69.25 level of resistance up here. It is going to be a slam dunk, right? Now, on top of that, you've got an ascending level of support. So you've got sort of this wedge up formation getting ready to break over this huge triple top setup level of resistance at that $59.94, $60 range. And I really do think it's going to either A, gap up in the pre-market and break it, or B, at some point in the pre-market or right at regular market hours open, break over that $60 level of resistance. And it is going to bring you Tendy Town, Kraken Kingdom, Chicken Church. My friends, come on. You gotta just take a step back and look at how freaking beautiful this really is. Look at this. Look at the absolute stupid freaking dumb fucking gorilla strength on this. I mean, you guys should honestly be proud. You should be so proud. 6 months, whether you've been in this since January, March, April, May, a week ago, 2 weeks ago, whatever it is, you guys are making stupid fat cash. The dumb money out there, holy Toledo. You guys are making some absolutely, it's just beautiful, right? You've earned your bananas. Be proud of your bananas. There's more bananas to come. And that's what I've got for this video. So this is my new abode. Hopefully you guys dig it. It's an Airbnb. It's kind of a little bit of a shack, but hey, this is dumb money. I'm an ape. It's suiting for it's suiting for what I like to do. So that's what I've got for you guys. Blah blah blah. And host people drop a like, consider subscribing. Whatever you want to do, my friends. Catch you on the next one. Much love and peace.